Live.
What's up, fam? It's Jay Lobos coming back to another episode, and I actually have still a treat for you guys. Mr. Carlos Pichardo, financial consultant, a financial advisor, knowledgeable on life insurance, investments, and I just thought it was really important for me to bring him on this show because, again, it's something that we're going through a situation, COVID-19. People are eligible, people are not, people have been fired or laid off from their job, losing their life insurance coverage or their money replacement policies like you've been talking about before.
Right.
Income replacement. So for you guys out there checking out the channel, consider liking, subscribing, comment, and share, guys. Let's keep this conversation going. And I wanted to continue the conversation, and I wanted for you to elaborate a little bit about the different types, which we're talking earlier about term, and now also we have universal, and the reasons as to why life insurance was basically created, or for the reasons that it was created. But now let's talk a little bit more about that aspect of if people right now could relate to the universal or the cash type policies. What is that about?
Perfect. So we talked about term, right? So term life has three different types. That's the thing. People think there's just all term is created equal. It's not. There's level term, meaning you're gonna pay, let's say, $100 a month or $50 a month for 35 years, right? And your price will stay the same as long as you don't change anything on it.
Okay.
Right? Then there's something called increasing annual renewable term.
Okay.
Meaning every year, what happens is your price of insurance, in order to get covered, you have to get a renewal, right? So you're gonna have the same coverage every year, but the price actually goes up because every year life insurance, there's two actual reasons that things that go into life insurance in a quote. It's your age and your health.
Okay.
So next
the older
year
you are and your health aspect of it deteriorates, you might need to pay a lot more, or you might not get approved.
The reality is I'm 30 years old now, right? What I pay $76, right? For my coverage. Next year, if I went to go get that same coverage, it's gonna be $80.
Okay.
Right? That's the explanation. So increasing annual renewable term means every year you're renewing to get the same coverage, but it's increasing.
So it would actually make sense if you're young and you're watching this video to try to get maybe a quote or a policy because you're healthy and you're young, so what you're actually paying would be a lot less.
So we're gonna go into universal life before I even go into the next type of term. A universal life policy is actually an annual renewable term policy with a savings account attached to it.
Okay.
So what happens is, the reason why I don't recommend these policies is the cost of insurance. Remember I told you every year it's renewing the insurance.
Okay.
And the price of insurance goes up. So if you're gonna have this policy for 30, 40 years, and right now the cost of insurance is $50, for example, how much do you think the cost of that insurance is gonna be when you're, let's say I'm 30 years old, now I'm 45. It's gonna be $150.
Okay.
Right? So what happens is, what they're doing is they promise you there's a savings account that goes into an annual renewable term policy, but the cost of insurance is going up. So if an annual, so if in a universal life policy costs you $100 a month, right? Think about this, guys. What they're saying is, that's what you're paying.
Okay.
Cost of insurance eventually becomes more than what you're actually paying for the policy.
Wow.
So guess what? You're still paying $100, but now let's say after 10 years, the cost of insurance is $150 combined with everything.
Okay.
So now, what do you think they're taking the extra $50 to pay themselves? They're taking that out of the savings account to pay themselves. And then what happens is in these policies, listen, like I'm telling you the information. If you own one of these policies, I would dare you to open them up and go into the illustration page, the page where it tells you how much money you're supposed to have at what age.
Okay.
And go to about age 60, 65. And what you'll see is at some point you were accumulating this money. So let's say now you had 90 grand accumulated because you've been paying since age 20 into 65. There comes an age where there's actually no money left in that savings account.
So in other words, the policy ate up. It's like cannibalism.
It eats itself up.
It eats itself up.
And then you get a letter. I've had people where sadly they called me because I've educated them on this. And listen, not everybody's going to listen, and that's the reality. And they call me and they say, I got a letter from the company. I need to pay $10,000 in order to keep my policy in force. I have 30 days to do that.
Wow.
Or the policy ceases. You paid into this policy for 30 years.
Okay.
It's over time. That doesn't happen in 5 to 10 years. That's why a lot of people don't realize it, right? So that's with that, right? And then with the other type of term insurance is called a decreasing term. Back in the days, you did mortgages. They used to use these in mortgages. They used to sell these as mortgage insurance, right? Because a mortgage, how does a mortgage typically work? You have a 30-year mortgage, right?
Yeah.
And over time, the mortgage is supposed to decrease.
Yes.
So what they're going to tell you is, hey, listen, you're going to pay the same amount of money, but every year you'll have less coverage. Now, think about that logically. Why would you pay the same for less coverage?
That makes no sense.
Right? That's ridiculous.
Yeah.
So a whole life policy, that's how it works. And we're going to go into that in our next section. Okay, guys?
Guys, thank you so much for the love and support. I think this information is very valuable, not only for myself. Thank you, Carlos. Obviously, you're the one that obviously gave me and helped me.
Well, thank you for having me. And
my policy, because to me, obviously, it's protecting my assets, protecting my family. I am the breadwinner, and sometimes it did take a little bit long in my scenario for me to get it, but we finally got it. I appreciate that, guys. Protect yourself, protect your loved ones, be healthy, stay safe. Until the next time, love, like, subscribe. Thank you so much.